Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders, and we've got Keith Harwood here with us today, one of our favorites. Keith, great to have you back. Hope you had a great holiday weekend. I think I just saw one hand that still had five fingers, so we're going to call it a win. You didn't. There you go. No dismemberment there. But yeah, so that's cool. But crazy. We had this long break from the market, a day and a half of markets closed, and I think it was enough of a space to let people kind of come off of the drunk that they were on with the rally and started sobering up a little bit. And it looks like people are kind of rethinking this. We definitely were in an overbought situation, no question. There was just so much enthusiasm and everybody running. So you knew it had to at least take a breath. But, the question is it just a breath, or did we just scream up to the top to ring the bell and we're heading back down now? So I'm going to tap you in and let you give us kind of the expert viewpoint on this. For everybody in the room, definitely chime in on this. This is a group discussion, and we want you involved in it. So I'm opening up the chat here so everybody can send us their comments, complaints, all that stuff, compliments, anything you want. Just send it over to us. Let us know you're there. We want you involved in this. So otherwise, Keith and I will just talk to ourselves all day, and it might be boring for you. So keep it exciting, folks. Keith, what are you looking at?
So it's was getting just kidding, but yeah, no, I mean the markets as a whole, you already hit it on the head. We were overbought, so bull markets have little dips like this, and my base case right now is that this bull market is still intact, but that can shift. We've got some new fundamental inputs. We've got some reinstatement of tariffs. We've got some new negotiations, some new information coming out with that. We had like the OPEC plus production hike that could impact crude oil, which impacts the global economy. We've got all sorts of stuff just out there, nothing too alarming yet. So it's not like we've got a reinstatement of the tariffs at the extremes that we were talking about with China that really caused this March and April collapse. This is all just kind of, minor, it seems. It's re-implementation, but it's nothing crazy yet. And the market doesn't seem to be that worried about it. We do have earnings.
Right, so wait. Yeah, let me jump in here with that, because you
Yeah.
just made a point that is something that's kind of been in my mind lately. And you said that the tariffs didn't have as much of an impact. I gotta believe there's some desensitization going on
Yeah.
here that, back then, we threatened tariffs and that's what caused the drop. Everybody thought that was going to implode. And then we saw how it played out. Now,
Yeah.
tariff schmariff, I just don't think people are reacting to it. So yeah, and I know you're probably heading in this direction, but I just, that whole kind of the amount of impact that it had a few months ago and the amount of impact that it's having now, to me, it's just mind blowing. It just shows the human element of this market and the kind of crowd psychology and how that can evolve. And for us as traders, I mean, trying to keep up with where that mentality is part of the
Absolutely.
game. I know that the charts are really the objective point. They're the ones that,
Yeah,
it's not what they say, it's what they do, right? So charts show
exactly.
that. So yeah, sorry, jumped in on you there, but just interesting to see the difference between those two events.
Oh, absolutely. And I think you nailed kind of where I was going. Like you've mentioned, you guessed me, well enough from talking many a time. But we had what seemed to be an overreaction back in March and April. Maybe we're underreacting now, but that's because we've now been trained that these tariffs are part of a negotiation element. The expectation is that if they're bad, then we'll negotiate. And if they're not bad for the economy and they're okay, then why does the market need to go down? So if we have something that is going to potentially damage the economy, people will negotiate and fix it. If it's not bad for the economy as it currently stands, then why does the market need to go down? And if it's actually good for the economy, then the market can go up. So there's not a huge reason to pull back because the expectation is that if it's bad, we'll fix it and then the market goes up anyway. So maybe people taking a couple leaps ahead and saying it's not going to be bad for the economy because if it is, we'll fix it, and if it isn't, it's okay. Whatever. I guess we'll see over time, right? If something is bad and then gets left in effect, then long term that may have a negative impact on the stock market. But for now, I think the expectation is that there's nothing we're going to do that's really truly bad for the stock market, at least, whether it's good or bad for an individual or for a group or for a sector. For the broad market, it's expected that this is going to continue to be a bull case. But lo and behold, on Thursday, on our half day, limited liquidity, limited volume, good enough non-farm payrolls. We close at highs and we have an RSI, which gives us an indication of overbought versus oversold conditions that closed at 74.5. For the broad market, that is a low probability event for the continued bull case. We've got a spot where maybe there's a little over exuberance on the short term. And all it took was a little dip on Monday to get back below 70, even with a close above Wednesday's high. So we didn't really pull back. Yesterday maybe put a little bit of a reminder to people that sometimes the market does go down a little bit, but it doesn't necessarily incite fear and concern that we're going into liquidation mode. Now we get down below, say, the February 19th high at 613.23, then maybe some panic starts to kick in that this was a top. But until we get to that point, and that should normally take multiple days, but it could happen in as quick as a day, then I think that could start to incite a little bit more fear. But for now, this is just normal process. Dip, then go up. The market doesn't always go straight up. It tends to go a little bit down, a little bit back up, a little bit down, a little bit back up, chop up. Over the weekly period, we have this broad increase in asset prices, increase in stock prices, and the market's just doing its normal thought process right now. Little profit taking, little risk off, little hedging, whatever it is. And then people that say, oh God, I missed out on buying on Thursday, I better buy on Tuesday. They're timing the market on short-term algorithms, technicals, all still point bullish. And because the technicals still point bullish, those algorithms are looking to buy. And I think generally the broad public is looking to buy dips
Right.
versus not buying panic. We don't buy what's referred to as a falling knife, but
Right.
buying little dips can generate decent returns on short-term trading opportunity. And that seems to be the
So,
market behavior at this point.
yeah, so that's it, that's kind of where we're headed with this. Like, all right, now we watched this bull market run. We were able to get in there and grab some trades. The odds were on our favor that things were going up because the general direction of everything was up. Now
Mhm.
that it's back, I mean, for a while there, we were a little sideways and we had to look at some sideways strategies. Now, it'll take a little bit to see what kind of personality the market's changing into right now. But if it's going to be
Yeah.
these little dips, there's got to be some ways that we can, cash in on that, right?
Yeah. No, absolutely. And those dips and those sideways behaviors do happen in certain sectors, but if the broad market is giving a tailwind, then finding some of the bullish cases, bullish sectors, bullish stocks is a bit easier than when the market's providing a major headwind, pulling the market down and then saying, okay, well, what's still good in this market?
Hmm.
And when the VIX is high, becomes that much higher. So the VIX gives that indication of the fear and greed index of the market. And when it's high, options are expensive. When it's
Right.
low, options are generally cheap. So just a barometer for how cheap I can buy options, how cheaply I can buy leverage, and how cheaply I can buy defined risk. When the market's collapsing, the VIX is 50, 60, panic mode. Options are super pricey because the potential for downside move of 2% in a day or upside of 5% in a day or whatever we're going to get or 10% in one day is present. Right now, I don't see us in a market condition where we're going to get 5, 10% moves in a single day, barring a brand new fundamental, really negative input. Positive, unlikely. It's just when we're at
Hmm.
highs, a 10% rally seems incredibly unlikely, of course. But you could
Yeah.
have something come in that we're not expecting. I don't want to speculate on what that would be because it's never what I would guess it would be when it
Right.
does
Yeah,
happen.
yeah. Yeah. Tell me about that, man.
Surprise. One, you have to surprise the market to get that kind of move anyway. And so
Right.
for that, we're not pricing in anything that should surprise us, but you never know, right?
Yeah.
So with the VIX here near the lows, the options are cheap. So I can get defined risk and I can get leverage. I just have to find the right stock. So I'm not buying a stock that's not going anywhere or a stock, meaning I don't want to bash on it, but Tesla isn't going up right now. So why would I go out and think I should buy call options in Tesla at, near the couple month low here, and it's not going up, and there's not a lot of money flow into it, and there's some negative headlines, and it just doesn't seem to have that bull case. Now, something could shift on the headlines, and all of a sudden Tesla's back to 350. That's just not a high
Yeah.
probability trade for me, though. So I would rather find something high probability with a tailwind that's working already, that people are looking to accumulate positions in, and
Right.
gives me a good balance of that high probability success with a good return on capital with the cheap options.
Let
So
me ask you a quick question if I can. So,
yeah,
stock like Tesla, right? I mean, this
yeah,
thing is getting tossed like a rag doll. Everybody loves him, everybody hates him, everybody loves him, they hate him. He's back
hmm,
focused on the business, he's back into politics, all
yeah,
over the place. And it is just whipsawing the stock price. Uh, when you're looking at stuff, and I know that you have the experience from being on the floor, but then you've also worked very heavily in the programming of the tools that you guys have, which have just been amazing.
yeah.
Does it model, or did you learn to do this as a trader, model that some stocks behave in a more predictable fashion than others?
Yeah. So the good thing about Tesla is it is amazingly, um, it has great potential for somebody like a market maker who's trading thousands of contracts on Tesla every day, because there's back and forth flow, there's uncertainty. Some people think it's
Mhm.
bearish, some people think it's bullish, some people think it's not going down, some people think it's not going up. So you've got all of these different scenarios that people are trying to price out. That complete lack of certainty is negative for the technical trader and the short-term trader, and great for the trader that is looking to just trade volume two directionally in short time periods, whether it's
That's yeah,
milliseconds, minutes, hours. I would say that with like a stock like Tesla, I could make an argument for an investment thesis or a market maker
mhm,
thesis, but not for a couple of day hold based upon technicals. That's just not there. So for
yeah,
me,
right,
when I'm doing my tools and my modeling and the AI stuff, we're building off of where the money flow is now. And that generally tends to be more technical driven with a fundamental backdrop that's known. When the fundamentals
right.
are shifting every day, it makes it very hard for technicals to drive the price action. So it gives great opportunity for those that want to just trade on the lack of certainty of price direction, i.e. the market maker, rather than those that are looking to certainty of price direction, i.e. the technical trader, the algorithmic trader, or the AI-based trader, which is what we focus on now with the advancements that we've had in AI. It just helps to, sort of supercharge that technical analysis and find really high probability setups in the stocks that have a high probability setup.
Really just a matter of knowing this is a type of stock. Once you know what that type is, does it fit your trading style?
Exactly.
Right. And then, knowing how to identify those characteristics. And I think you touched on a couple of them that help you kind of look at a stock. Let's say, it wasn't Tesla that everybody knows about, some other stock. How do I know if it's like a market maker's playground and, they're in there
Yeah.
just having their way with it? Uh, but you just said, some volume things, liquidity, if there's enough volume, they can get in and out, they can get their trades going, it gets a good spread in there, and they can look to find some money. So, those are good things to remember as we're looking at this. And I personally, and I again, way, way below the experience level here, but I look at some of the indicators and I look for I call it the shave and the haircut patterns,
Yeah.
right? So you know what to predict. You hear you know what's coming next, and so if
Yeah.
you look at that on the chart and you see, oh, it did this, and then it did that. It did this, it did this, and then it did that. You get this kind of well-behaved stock, a little bit subjective of a term to describe it, but those are my favorites. That's what I go to. And I would put myself in more of like a income trader. I'm looking just to generate a little bit of money. I'm not looking for winning lottery tickets. I'm not
Yep.
looking to, have one trade and retire for the rest of my life. I don't have that expectation. Wouldn't walk away from it if it landed in my lap, but I'm looking for
Yeah.
more of, hey, give me 20 points, 40 points every couple of days. And I know I'm going to have a drawdown here and there, and I got to be
Yep.
ready. I got to be prepared for it. But knowing to, kind of try to land this plane here, knowing that personality of that stock, I think is pretty important for everybody. So
Yeah. And
and I'll
like,
be
I just pulled up another chart here just kind of as a comparison of something that maybe not everybody's even watching, but Apple Oven had this amazing run. It's, a app stock, right? And it went from a year ago, $80. It peaked out at 500. Muddy Waters said it was a bearish stock here back in March. It chopped down, it chopped up, it chopped down. There's nothing really clear here, but it is at least getting more mature. When it's immature, or driven by fundamentals, it's going anywhere, and people can be speculative on any sort of direction. These are speculative type stocks. And this could be a stock that goes right back to 500. It could be a stock that goes to 200 or lower. That's not a high probability setup, but if that's the playground that you like, looking for a big potential return, it can be a valuable trade. But those that have been looking for a big return over the last couple of weeks, they've gotten stuck on the other side now. It's consolidating instead. It's not moving anywhere. I like like you said, I like the stuff that's a little bit more routine, and you can compound the trades, and you can start to generate those returns when you've got a predictable trade that can compound results. Because if you sit there and say, I'm going to find the next Palantir and I'm going to hold it forever, or I'm going to buy Apple back in 2001 and hold it for 24 years, or Tesla back when it was a low price stock and hold it for a decade or two, completely different trading philosophy, completely different investing philosophy. And for some, it works. Seeing that, unicorn type company that is got long-term potential. But if I can find little trades that generate returns every week and I'm constantly flexible and rotating, I can actually do a lot better than that, over the well, maybe not better than buying, Tesla when it was IPOing and Apple back in 2000, but those are rare finds for most people. Some people do find them and they stick with them, but gosh, I mean, if I was buying Tesla for their price, let's pull it back, Tesla up. Back in like 2013, I looked at the stock and thought, it could be an interesting investment trade. Let's go to a monthly chart. That's still not long enough. Quarterly chart. There we go. Like you go back to like 2013, the stock was, post splits $2. And I remember looking at it for when it was $20, this was pre-split, thinking, if it got to like 80 or 90, I'd probably be out, which is the equivalent of $8 or $9.
all right,
Now it's at 293. So
right.
yeah, I could have quadrupled my money, but what's going to keep me in that trade for, the 12 years that it took to generate the major return is basically forgetting that I had it, or
Yeah.
really, really believing in it. And
It's like me
that's
buying a
not right.
30-year roof guarantee. I'm not going to be around in 30 years. I can't wait for
Yeah,
that. It's like
yeah, exactly.
it's wasted on me.
Yeah,
It's interesting too, that whole concept of uh, you know, compounding and the way money works in your account. In this example, so many people come up to me and said, "Oh, I knew a guy, he bought Tesla back in the beginning, or this guy got into Bitcoin way, a long time ago." And, great,
yeah,
great for them. Absolutely wonderful them for them. There's not very many of those even potential examples that somebody could have gotten that lucky with. Not only that, even from, $2 to 200 over 12 years, the amount of money that you have to put into that,
yeah,
you know, uh, uh, I'm talking to a lot of people who are interested in trading, and okay, there's definitely some mid-range traders, some big traders, good for them, and they're
yeah,
all pretty smart. Most of the people are saying, how can I just kind of make life a little bit easier for myself through trading? I just want to get a little bit more
absolutely.
comfort out of this. And in order to do that, you just have to find that regular cadence of high probability trades. So yeah,
Yeah,
and I know that's kind of what you guys built the tools for. That's why that's
right.
amazing, you know.
Yeah, and that,
But
I mean,
yeah,
you could go, example after example, of course, but I did see something recently where some wallet in Bitcoin, somebody put $7,800 back into it. It was either 2010 or 2011, and the wallet had been stale until just recently and looked like it cashed out for a $1.1 billion crypto sale. So it's like whoever was buying it back then for $7,800 turned $7,800 into 1.1 billion. Good for him.
Yeah, it's
When
been
that
more
number
points in
hit
my
30
life
grand, I'd
than
be looking for my Bitcoin wallet and saying, gosh, I just quadrupled my money. And I think that's the
you're getting
philosophy
out.
for most
Right.
people. There are
I
the hold on for dear life and make generational wealth out of it philosophy. And if that's you, great. But I wouldn't put the whole, the whole investment portfolio into it, assuming that that's going to happen because it just doesn't happen most often.
There's been less times in my life by a very high stretch that I could forget about 7,800 bucks
Yeah.
than I could just absolutely set it and not have it impact my life. So,
Yeah.
I don't think that's ever going to happen to me.
No. Exactly. And it's not going to be the norm for most people. I mean, I've said it before. The only way to turn Bitcoin profit like that was to basically have gotten into it back early, lose the hard drive, and then say, I got to find this hard drive because now that it's worth $1 million, or in this case, $1 billion, I got to figure out how to find this thing wherever it is. And I will spend every waking moment looking for it, so that I can capitalize on that and hope that I do find it. But, that's finding
Yeah.
the diamond in the rough after buying it, years prior. So,
And
like you said,
it's not sustainable either. I mean, you
no,
can't just generate income. Anyway,
yeah,
let's bring this back down to where we're at today. And
yeah,
I know that you had a couple things that the tools have helped you find that you wanted to talk
yeah,
about.
yeah. So first things first, I mean, NWS, we talked about it last week. Didn't really go anywhere. The pullback, basically sat through the end of the day Thursday, pulled back on Monday. Um, for what it's worth, I just don't see this necessarily playing out as well as I expected at this point. Small loss. Again, we've talked about this before. When you've got a situation where the small loss occurs and it's not really worth it anymore, move on. And
Yeah, the
NWS is
quick,
not
the,
a stock that I'm that interested in anymore, right?
yeah, the kind of rule of thumb that you gave out a few weeks ago that I thought was incredibly valuable was when you see a stock or a trade start to turn against you, would I take that trade today? And
Yeah,
in this case, probably not. So if that's the
probably
case,
not.
get out. Even though it's a small loss, and those can be really misleading. You want to wish that thing to become profitable, and you're wishing as hard as you possibly can. But would you take the trade today? Because if you wouldn't, get out. Take that money
Yeah,
out, put it somewhere that's gonna grow, you know?
yeah. It's death by a thousand cuts if you just stay with the small losers and excuse me and turn them into bigger losers. If you take
Right.
the small loss before it becomes a big loss, can focus on the winning trades, and I can spend my mental energy and my physical capital, my cash, on the trades that are actually working. I'm going to do better in the long run because I can accelerate those returns in the good stocks and take the small losses in the bad stocks or the bad trades because frankly, you're even if you have a 70% win rate, one out of every three trades that you're going to have is going to take a loss. Now, if you have one out of three trades that are small losses and two out of three trades that are bigger than even the same size as the loss, small wins, you're net building the account by compounding returns. If you've got a bigger size win than the losses, even better. And now you've got a repeatable process that builds and compounds upon itself. So if I have
Mhm.
my average loss is 30%. My average win is 30% on my options trade. But I'm winning 70% of the time and losing 30% of the time. That's a hugely profitable trading strategy, and I need to focus on that. But once I start letting that 30% loss turn into a 60% loss out of the hope strategy, now I'm breaking even. That's not a good strategy, right? I mean, I've lived through this. I traded that way for a while where I said, oh, well, maybe it'll come back and I've got free capital to deploy. So I'll just let it come back and see if I can get it back to 0% or a small win, just so that I can feel better about it. But it's a negative expected value from today. So why would I leave the money in there rotting rather than deploying it somewhere else and actually generating better returns as a result? So in this
Yeah.
case, if I think that this is just going to potentially rot and turn a, say, 30% loss into a 60% loss, I'm now drastically modifying my long-term expected returns into the negative or neutral, and that's not good. I'd rather have
Yeah.
stuff that's building. So
Well, yeah, no, appreciate you stepping in and showing the trade, even though it didn't go the way we were looking for.
yeah,
Well, sometimes people will avoid that stuff, but
yeah.
um, it's good
Well,
to
I mean,
know how to
we
handle
can.
it either way.
Yeah, I mean, we could talk about, like a couple weeks ago, we had the JP Morgan idea, and that was a great winner. And so when you've got those and those were winning and taking the profits there instead, that's the way that we build the account. So JP Morgan runs, take the profits there. NWS
Right.
drifts back down a little bit, take the loss there. The net of those two trades was strongly positive, and so that's good. But if I let a 100% return in JP Morgan get offset by a 100% loss in NWS, now I've broken even though I had one really good trade because I let a slightly bad trade turn into a really bad trade. And that's not a long-term model for success, right? So, but onto like some more of the stuff that I'm looking at today, honestly, one of the things that pinged into me from the AI stuff was actually a casino name. And kind of surprised me because I was like, well, why would a casino be coming up? I've heard nothing but negativity from people talking about how the big beautiful bill is so bad for gambling. I looked at the chart. Clearly, that's not the viewpoint of the market. So I said, okay, well, my thought is based upon this commentary from professional gamblers or maybe semi-pro gamblers that the taxes related to it, whatever. We don't have to get into the minutia. It can be bad for gamblers. Well, the casinos are doing just fine with it. So I now disregard some of the noise there and say chart on its own looks good. Spiked higher last week on July 1st. Minor pullback today or yesterday with a bounce back towards the high point that we've really achieved here. And then I went over to the AI toolbox and said, well, what's MGM looking like it's expected to do based upon this recent behavior? So we take the behavior that's happened, that big spike on the first, the little pullback, and AI says, now it could actually, or should actually, maybe could or should start to get into a more predictable rally mode, drifting higher every day, get that tailwind. Maybe the first was a little bit too aggressive. So then we had profit taking, causing a little bit of a pullback yesterday. This looks a lot like JP Morgan did for me a few weeks ago, where we were looking for big potential returns with consistent positive expected returns every day. 1%, 2%, 3% per day over the next couple of weeks. And we've got earnings coming up on July 30th. So not something I want to hold through earnings, but 1 to 2 week holding period could potentially work here. And with a toolbox, we look for a 2 week holding period max. Now, traditionally, I look at these just more for the first week because things change and then the model changes. So I don't want to press out for a 2 week return profile if something doesn't go in line for a day, 2 days, 3 days, 4 days, and 5 days. If 5 days from now we're trading unchanged, the model's going to completely shift and we're not adding another 9%. So every day this model is updating and I got to keep refreshing it to see how the model shifts. But on the baseline of it, a week from today, the 15th, projected pricing around $41. Current price around 37 and change. The options market, in August 38 call. Oh, I got to wait till the open now, 5 seconds, because we got to get 35 seconds. We got to get the live pricing. But the August 38 calls went out yesterday for, let's get the last price here while we wait. $1.68. We go to 41, those are worth at least $3. A little bit more because there's still time to them and there's still an earnings announcement to them. So, okay, now I'm starting to see something that makes sense to me. If I'm conservative and I don't expect that full move to 41, even just to 40, I could still double my money. If we get all the way to 41, I can do better than that. So my base case is maybe 60 to 80% if the model is right, which it tends to be pretty accurate for up to about 75% of the days on the next day's range when we start to go through this. So if we stay within this expected range today, close near that estimated high of 38 and change, that's a good starting point. That tells me that we've already got that appreciation. And if I get to 38 by the end of the day, 70 more cents, I've already started to generate some returns and I can let this keep moving. If this market closes today at 35, it tells me, okay, well, now the model is going to shift. It's not going to like this model anymore. And I've got to adjust my trade thesis. But over time, if the model does prove accurate, a couple of days in a row of rally, all of a sudden I'm generating some really nice returns. I love the way that the forecast toolbox is predicting higher movement here. I like the way that they're looking at these casinos. And just for a note on the broad technicals of the market, the S&P is projected right now to have maybe a little bit longer dip before the rally. So even if S&P is holding or drifting a little bit down, it doesn't look to be a headwind in the short term for MGM. What would start to create a headwind, in my opinion, would be if this starts to get into liquidation mode and we actually start getting low or back below that February 19th high. But that's not projected to occur necessarily, other than maybe a blip before recovery in the next few days. So
Yeah.
all in all, it looks like a positive setup. Looks a lot like JP Morgan did a few weeks ago. But frankly, also looks a little bit like it did last week in News Corp, and that didn't pan out. But if we've got when it's right, I get 100%. When it's wrong, I lose 30%. That's a good long-term strategy for me.
Yeah. That's cool. So I just dropped the link into the chat for everybody who's interested to
Yeah.
the tool that you're showing everyone there. So definitely check that out.
Yeah.
It's been
It's a really
amazing.
powerful tool. I mean,
Yeah.
frankly, it was something that I was a little bit hesitant for originally, but then I started playing around with it, and you start to find how it can work for you. So for me, like I go a lot of times to this list of companies that have a really high projected return in the near term. The MGM, Nike, Freeport-McMoRan, Nucor, Ford. All of these things look particularly interesting, but sometimes when I pull up a name, it may be projected to have a really good return for a day or two. And then all of a sudden, well, actually, Seagate's a bad example. That's still projected to go up. How about GameStop? I'm not sure what I believe in GameStop. I haven't looked at that one yet this morning. Overall,
Yeah.
over the term, it's showing a little bit more sideways action. It's still 9% return, but it's mostly a 1 or 2 day move and then stagnant. So that's not necessarily a stock that I'm like, I love because my move's going to happen in 1 day. Now, if I'm a 1 day trader, great. Buy in GameStop today, maybe sell it tomorrow. If I'm looking for a 1 week hold, I like to see that accumulation of returns with multiple days of rally built into it. And that's where I can really generate some nice returns here. If I've got a Altria, it may look like a neutral stock today, and it looks like a neutral stock over time. And I say, okay, well, Altria is not going to be a stock on my list for today. It's a waste of my time. But I got a quick view there. And if I look at, the technical chart, I can say, all right, it looked like it might be pressing a breakout. Well, it's not breaking out, and the model doesn't project it to break out. So move on quickly and let myself focus on the stuff like MGM that is actually setting up for potential accumulation of price and that general return. And it's already up 43 cents today. Started off here, a little bit lower, and it's already or a little bit lower than current prices. Started up higher and above yesterday's high. All this seems to line up really well for me. And, like I said, I don't necessarily need to get fancy and say I'm going to buy some way out of the money calls that have a low probability of success, like the August 45s. That's well above the range I'm expecting to price out to. So sure, I might make a little bit of money, but it's a lottery ticket. I can get something a lot higher probability that if we hit a $40 to $41 price point, I'm generating really nice returns on a 8 to 10% rally in the stock.
Yeah, that's awesome. Anybody, if you guys are, drop a ticker into the chat if you want us to pop something in here and we'll take a look at it. I know we're going to have to wrap up quick. So if you want to do that quickly, we might have a minute to look at it. But the getting the list for me is always that list that you're showing. It's just amazing because so many times, man, I wake up in the morning and I'll pull up all the market reports. I'll start looking at charts and stuff. And it's trying to figure out where to start, And I have a couple favorites. I've got some watch lists that I put together, but I feel like it's a Spotify algorithm, my watch list, that I just get deeper into the rut. And at some point, I'm just going to hear the same song over and over again. But
Speaking of Spotify, nothing interesting there, right? So it's random behavior in Spotify. And that's actually another powerful thing I'll just mention here. If you sign up, take a look at this model grade when you're evaluating, because if the model grade is NA, it means that the AI is not high predictable or high confidence on the model. So when we looked at MGM, that model grade is a B. that means that it is much more confident on that range. Spotify,
It's got, and if I remember what you explained, it's got a whole series of data points, like massive
yeah,
amounts, because you got that computing power now. If it doesn't have enough of those data points, or the data points don't instill the confidence into the algorithm, that's when it's going to
correct.
flip to NA, and it's going to give you
Yeah,
an indication of how much it's looking at.
yeah,
Here's one to pull up: GIS, General Mills. Let's see if
yeah.
that's something that's got a little bit going on. All right,
So
B.
General Mills, this is one where, expectation is a little bit lower today. A B model grade, so decent confidence, but you can see the expectation is basically chop. When I
Yeah.
look at this from a technical perspective, when I do it on, without the AI backdrop, I say, okay, well, below the
Yeah.
previous lows, it looks really bearish. Above maybe the 50-day moving average, it starts to look pretty bullish. The forecast in the next few weeks is effectively that range, maybe
Hmm.
testing above the 50-day moving average in a week, testing down near the lows here around $50 in the next few days. And it's a choppy trade. Income
Yeah.
generating strategies like put credit spreads or call credit spreads may be the answer here. Or if that's not really your style, then do nothing,
Find another
right?
stock. Yeah, right.
So, and there's a whole universe of stocks out there for every type of trader. Some people love this kind of setup for income generating trades, and others like the, MGM that I mentioned for buying a outright call or a call vertical or something a little more leveraged for a potential, for that potential 60, 80, 100% return. Credit spreads, it's more about getting a high probability of success of staying within that range. And, there's all sorts of ways to implement all of this stuff in here. When you sign up, there's some notes on how to utilize the tool. And then, frankly, if you've got questions about how best to implement it for a certain trading style, absolutely reach out to me. I can help walk through it a little bit so that you guys get the leverage that you need out of a tool like this, because it can work for almost any trading style. That's more technical based, of course. Fundamental based stuff, that's not being predicted by this. It's predicting the technical maneuvering and the minutia in the market based upon how the prices have reacted to already known inputs.
Yeah. Wow. Well, good stuff. I know we went over a little bit. We covered a
Yeah,
lot of ground. There was a lot of meat on this bone here. Uh, Thanks, Keith. Appreciate you taking the time out today to kind of walk us through this, give us a little bit of a test drive of the
yeah,
tools, and kind of we'll be keeping an eye on the MGM stuff to see what happens with that.
yeah,
I'm always watching this stuff in the background. I try to update everybody on how it goes. So we'll get the messages out to everybody. We'll put some links in the email follow-up. If you're watching this in the replay, you're going to be able to get to that stuff there as well. Again, that link's in the chat. But Keith, thanks again. Thanks for taking the
thank
time. I
you.
know you're a busy guy. Really great having your input on this.
Absolutely. Thanks again, John. Thanks, everybody.